Good morning, good morning, good morning. Welcome back, everyone. It's been a long time, but finally something has happened, so we are making a new video. I'm starting it off with Dixie on a weekly time frame. As you can see, Dixie has lost its 106 support that we were looking for as holding, and our target of 104 support is also broken. Hence why we should be looking for big upside in crypto and tech stocks if the drop continues. Now, I'm going to turn on my indicators just so you know what I'm looking for. So there is no shenanigans, surprises. And welcome back to the lag. There you go. Okay. So what I was looking for was once we put in the bottom here at 100, I was looking for the pivot to 106 to 108 midline of the channel. We actually did get it. I was looking for continuation back up to the 112, 114 area. But what we did was we consolidated on the middle of the channel and we actually broke down, tested it, and rejected. Totally okay, because I was already looking for this to be a rejection area anyway. Now what I want to do is retest this inverse head and shoulder, and what we're doing right now is this white line, this 102.25, was the support before we made this impulse to the upside. So I don't want us to lose between 10, that's like 103-ish. And I think that's where we're at right now. This bull flag measured move of the breakdown is basically this level here at 103. But I have space for us to go all the way to 102 to like 100-ish. And that's still going to be a bullish retrace because it won't be a break of structure for us for the upside continuation if you're looking at it in a much higher time frame. Now, I know that if you're trading this on a weekly, your uptrend ended like over here. And this is why the short kicked in after this order block was rejected. The order block gave you this target. The target got tapped, we consolidated, and then now we had our own fib target from this accumulation. The order block gave you this target, you hit it. Now what we're doing is we're consolidating between the low and the high. Basically, if you mark this low and this high and you pull the fib, this would be like the 0.5, right? 0.5, but in an uptrend. Meaning that if you are in an uptrend, you only just tested support, which is the 50% retracement, and now you're trying to consolidate in this 50% retracement, hopefully making a higher low. So if this thing pivots here at the 103 level, it would be a higher low consolidation for this continuation to grind out sideways and then back up into those levels that we're looking at. If you look at Dixie on a much higher time frame, which you should be because Dixie um, is like a global index. It's trading all over the world and it moves slow. So then that means it's going to take time for the moves to play out. And here is what I always drill into the members on a regular basis. You can turn this off, all the indicators. But like this descending channel, we broke out of it. We are in an ascending channel where you should be looking shorts on the top. This 114 to 125 target was the fib target from the all-time high that we put in near like 160 on Dixie. Like how long ago that was, I don't remember. You would have to go to like a yearly time frame to do that just to prove my point. The blue vertical lines are fib time. And I was just trying to see if I could find some confluences with fib time to see if I can spot pivots on an institutional level. It's easier said than done. Sorry, guys, this thing is lagging pretty hard because market is moving. I have trades going on. I think I'm gonna just skip the point that I'm making on here. Oh, finally. If you go look at the higher time frame, all the stuff that we're dealing with is like looking at a 1 minute chart. You need to go to like a much higher time frame to realize that we were always gonna go higher. We came off of highs. We had a blow off top from all the way over here. We had that blow off top that gave you these targets over here. We find our support, and now the targets of this low is 134 to 150 on Dixie. Now, as you know, government is printing and messing with the interest rates and blah 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 blah. It doesn't matter to me. What the government is doing is market making the dollar. They are making the market for the dollar so that they can continue to print, pay off their debt without destroying their economy. Because the only way they can pay debt is to print money. And as they print money, they're going to devalue the dollar compared to the other global currencies, meaning Dixie will get an upside push if government keeps printing. Every time the government decides to cut interest rates, which they will have to cut interest rates at some point, and when they do that, they will actually try to keep Dixie in check by doing that. So if Dixie gets too high and dollar gets too devalued, they will probably cut interest rates that will make everyone basically sell off other currencies to Dixie, because Dixie will become more valuable. Not Dixie, dollar will become more valuable as they increase interest rates, uh, because there will be a more of a cost to it. Another last thing I want to say about Dixie, guys, moving forward from today and moving forward next year or so, our biggest holder of debt is Japan. They're the biggest bond buyer, and that is because Japan had negative interest rates. So anyone with any money can't leave it in the bank because they're going to get charged interest rates. Now, it's not people that had that issue. It was the banks that had balances that they couldn't even park their bank balance with the government to get, a percentage. So what those people did was they bought all the US bonds at better rates. And now that their country is officially going off of negative interest rates, and you just imagine what that means now. All those bonds, if they start being sold off, and if our bond sales, which recently are weak, like people are not buying those bonds because they can find better investments elsewhere, you will see that affect markets. You're going to be looking for an excuse as to why the markets are doing what they're doing. Well, when we had low interest rates, everyone parked their money in stocks, because those tech companies can rebuy their stocks for cheap because they borrowed money for free. Now that interest rates are up, you won't have share buybacks. More than likely, you'll have people selling their shares, like what Elon did. Elon was the largest seller last year, 50 billion shares, $50 billion worth of sales and stuff like that. And he paid the largest tax bill, blah, 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 blah. Well, all the largest company CEOs retired last year, and all those CEOs get their pay in stock. They all cashed out for a reason. So if you are in equities, you should have an exit strategy if we are going to go through a 10-year cycle of downturn. As interest rates are increased, you will see the market take legs down. And the government, as they increase interest rates, are going to induce a recession. They will then play the game of increasing interest rate, cutting interest rate, increasing interest rate, cutting interest rate, until they find a homeostasis balance. And every time the market is trying to anticipate what the next move is with the dot plots and stuff, the market will get volatile to be pricing in what they are assuming the next rate will be. As of right now, with all the data that we have gotten through the economy, the government is very less inclined to increase rates, or sorry, cut rates until like June or July next year. Meaning, like, if they're not cutting interest rates, they're gonna let the market rise. We should see a risk on mentality in stocks and crypto and all that stuff, because they need the market to go up before they cut, so that way the market has an excuse to drop. If they start cutting right now, you can imagine the situation it would cause the market. And also, like I was telling you about how the government is going to have to continue printing and all that stuff, Well, when you do these debt ceilings and government shutdown bullshit, the only thing they can do to solve that is print money. Not only are we not printing money, not only are we printing money to like hold the government in place, we are basically using the wars as an excuse to go and like meddle in other countries' affairs. And now we're like, hey, you know, we're going to support you with taxpayer dollars. I mean, we're giving all this money and assistance away, which I'm not blaming, or I don't think it's bad, but I mean, you got small businesses here in America that fucking need assistance and financing. They can't afford to stay open with, you know, the way that the market is going. No SBA, no one is gonna go be buying a new house or buying a business with 8 to 10% interest rate. The cost of just operating a business is too high right now because the government isn't really making concessions because they need to keep interest rates high to pay their own fuck ups. On top of that, you got student loan debts right now being paid. So these kids are paying student loans and they don't even have a job. So, and on top of that, you have the largest credit card balances in history. All those SBA loans, EDIL loans from the businesses during COVID are due now. So there is a snowball of shit coming. And I just wanted to make that as known as possible. How you handle your positions is going to be very, very important the next 10 years. We are going in an economic cycle, in my opinion. And what this means is if you're not aware of the shift that's occurring right now, you are not going to be able to capitalize in the next 10 years on what's going to happen. So let me now, in conclusion, give you what I'm doing. In the last 3 to 5 years, I've closed every single retail store I had that had rent associated with it. If I don't own the land, I don't want to do business because the landlord, COVID was a great example. Landlord don't give a fuck. He's going to increase your rent 3 to 5% every year because his costs increase 3 to 5% every year. And if your business is just break even and you're not taking home a certain amount, your operating costs will eat you out in the next 3 to 5 years. The the profits in your operating margin, whatever the fuck they were, they're going to get eaten away as interest rates increase. As cost of business increase, your profit margin will decrease in time. You will get squeezed out. What happened during COVID? I was a small business owner with multiple rented locations in like nice areas. All those areas had big box tenants and small box tenants. When COVID happened and all the people got pushed out of those retail spaces, big box tenants came, got those leases, and those big box tenants do 30-year leases, 50-year leases, you know, like Walmart and all them. And I had like a I had factories. So when someone like me gets squeezed out, if someone comes in, not only are they getting abated rent because they came in during COVID, right? So they got nice deals, nice setup, nice cushions. Maybe the landlord even gave them allowances for fixing up the suite that they're doing businesses, whatever. And then they got to start at the lowest rent structure possible to go and get those increases 3 to 5%. Anyone who started 10 years ago when the market was on top, you were already in the top price, top rate, everything. You didn't get no concessions, no discounts, nothing. You just got squeezed out. Government was like, here, take this loan. After a year, you had to pay back that loan even if your business didn't come back because after turning the world off for a couple months, you're not just expecting to go back to normal, you know, like everyone now saw what happened. Now they're more risk adverse. They're putting cash on the side. They're not overly expending. They're not lavishly throwing their surplus income into like luxury items and shit like that. They're not taking their stimulus check and going to Louis Vuitton. You know, they're smarter because they saw, look what they did. Everyone got their stimulus check and every fucking luxury brand popped off. And how did that help you? And then after that pop off, look at what happened. APs, uh, all those fancy watches, all those fancy cars, everything lost value. Even diamonds are down. Like things lost value because it was an inflated market because the demand was there because people were bored at home and they got free money, but they never really knew what to do with. And they just, you know, turned it on Robinhood and went to GMC and AMC stock and started going crazy on that. Like that's why the rich got richer because people are not adverse as to what to do with their finances. So as a warning, In the next 10 years, my prediction is prices will continue to go up because they have to go up. People will be squeezed out of professions due to AI and automation. They're going to have to go home and sit on their ass and figure out how the fuck they're going to make some money. And as they can't figure it out, their only source of income or wealth will be the equity that they have in their house. So whoever has a house eventually is going to have to cash out, go to rental. If you're a renter, rent goes up in your apartment 3 to 5% every year, like it just as your business rent. And eventually, if you do the math, in the long run, how is that a winning strategy? Unless you have income and you're renting because you're taking your money and deploying it elsewhere instead of buying a house, you're gonna be in a situation. So please, please, please take this as a warning. I didn't even go over Bitcoin. I didn't even go over ETH. I just want to go over Dixie today. Members, you have you have a lot more data coming your way, basically. So if you're not a member, I would highly suggest joining. Membership starting January of this year is going from $20 a month to $200 a month. I understand it's expensive, but I am assuring you that the quality and the value of what I'm going to be providing moving forward is going up 100-fold. I'm only increasing my cost 10x, but you're going to get 100x in return. If the bull run comes or not, I will be able to tell you guys what the best course of action is moving forward so that you're not repeating any of the mistakes that I have made throughout my last 10, 15